Hey guys, Collateral Crypto here with a new YouTube video update. We have had a crazy 48 hours. The craziest 48 hours that I've ever seen myself, probably in my 7 years being here. Not specifically with reference to Bitcoin. Bitcoin held up actually really well, and so did some other majors, but with altcoins. We saw something over the last 48 hours that I haven't seen in the last 7 years that I've been in this space. I've never ever seen it happen like this. Um, as long as I've been in this space. So if what happened in the last 48 hours was shocking to you, it was just as shocking to me and many others in this space. I was actually traveling when this happened, which is unfortunate. So I wasn't actually sitting at my desk when this massive liquidation cascade happened. I did check my phone at some point in the night and was absolutely shocked by what I saw. And so today in this video, guys, we're going to discuss exactly what happened, as much as we know at least. I'm going to give you guys my thoughts on what I think may have caused this. I'm going to talk about why it was so significant, why this was literally the biggest liquidation event in nominal numbers that we've had in this space ever. This was a combination of probably a number of factors, and we only know so much about what happened, but I'll break down my thoughts on that. And we'll talk about the situation. How does this affect the market cycle, if at all? What does this mean for altcoins that have broken bullish market structure? What does this mean for the market as a whole? And depending on how long this takes, I tweeted the other day that I was going to be making a video, and I asked people to ask me questions. We're going to go through that tweet, and we're going to go through some of the questions there that I think are most relevant and worth answering to the best of my ability. And depending on how long this all takes, I'll either continue on to TA, technical analysis of specific coins that I hold, or we will do that in another video, depending on how things go here. But what I want to start off by saying, guys, is the events of the last 48 hours were, for me, the biggest loss that I've taken in my entire time in crypto. So I haven't taken a loss this big since ever, and I've been in this space since 2017. So it's been 8 years that I've taken a loss of this size. I know many of you have also taken significant losses over the last 48 hours. I think I've talked to more people that have taken massive losses in the last 48 hours than people who got out just fine. And I know this is probably because I deal with, or I talk to, a lot of traders. And this primarily affected those actively trading. If you were holding spot coins, your portfolios are down a bit, but the amount of volatility we saw really affected active traders more, those using leverage. And this wasn't some situation where it was a strange situation in that even if you were being what we consider relatively safe, with low leverage positions here, even if you had set stop losses, this still could have really, really damaged you. So it was one of those situations where, at least what makes me feel better about it, is that there's not much that I could have done to avoid this. Aside from, of course, not using leverage, but as an active trader, using leverage is a tool that we use every day, and you can use it responsibly if you know what you're doing, and that's just part of what we do. And so then I asked myself, would there have been a position or a situation in which I would not have been using leverage on that day that this happened, where I could have avoided this? And the answer is no. I'm a trader. I actively trade. If you're actively trading, you're probably using leverage to some extent. Of course, there's different ways to use leverage, and we'll talk about shortly how this affected almost everyone using leverage in any case. But one good thing is I do keep my spot and trading portfolios separate. So this wasn't able to completely wipe me out. It was a massive, massive hit, but I will get back from it. I've been in this space for 8 years. I've dealt with these types of blows, maybe not as big as this one, but there's no option here besides crawling ourselves out of this hole and working harder. So I will do that, and it's, I don't blame anyone else. I know there's arguments, or there is speculation as to who might have caused this, or whether there were some bad actors, or whether there was some malpractice going on with the exchanges. Whatever it was, I don't blame anyone but myself, in the sense that this is trading on exchanges is a risk that has some inherent risks that we as traders are aware of, and no one's going to bail us out in these situations. It is what it is. Our only form of recourse is to sit back down and grind harder and get out of it. So with that being said, guys, let's go ahead and jump into this. This video is going to be a bit of a monologue. I'm going to be talking about my thoughts, primarily answering questions. We're going to go over some charts, but I'm probably going to leave the heavy analysis for individual charts till the end, or maybe in another video that will come in the next 24 to 48 hours. So if I do not include it here, it will be included in the next one. But I think most importantly, the thing that I want to cover here, because again, almost every single altcoin chart has been affected, and I don't have time to go over every single one. So I want to talk broadly and generally about the market as a whole here to kind of give you guys an idea of what's going on and allow you guys to at least have peace of mind if I don't specifically talk about your altcoin in this video, to understand what's going on here. I think that right now is the most important thing, and we can get to individual coins either after that or in another video, a follow-up video in the next 24 hours. So with that being said, guys, let's go ahead and talk about the significance of this event. Okay, this was, again, as you probably heard, the biggest liquidation event in crypto in the history of crypto. There has never been a liquidation event that was this massive in nominal terms. Also, obviously, where Bitcoin is at all-time highs, so the market cap of this space is pretty high as well, higher than it's ever been, and so it makes sense that therefore liquidations are more significant. But it's not only that this was the biggest liquidation nominally, it was that this was the most severe liquidation in terms of drawdown on a number of alts across the board. We've never seen anything like this, period, right? So I've been through the collapse of FTX. I've been through the COVID crash. This was unlike any of those in that even in those instances, we didn't see altcoins across the board take dumps the way that we saw them take dumps here. So I've highlighted some tweets here that I want to go over that kind of allow you guys to understand what happened. This is a good example. Top 5 coins that dumped when market making disappeared. SUI dropped 83%. Okay, from 380 to 50 cents in minutes. Cosmos, Atom dropped 99%, basically went to zero, right, on some books. So on Binance, I believe, it went down to zero, from $4 and some change down to zero. This is a top 25 altcoin, okay? This is what most would consider a major altcoin, right? Top 25 means, I don't know exactly what the market cap was, but I'm assuming billions of dollars of market cap. For that to get wiped down to zero is absolutely insane, okay? Just to make you guys understand what this means, if you had a long position on Atom on this exchange and you were using 1.2 leverage, which is barely any leverage at all, you would have gotten liquidated with this drop, and there is nothing you could have done about it. Okay, you could have set a stop loss, of course. However, when we get these types of moves that are so violent, even when your stop loss triggers, if it does, because sometimes there's slippage limits on your stop loss. So if you set a stop loss, let's say Cosmos is trading at $4 and you set a stop loss at $2. I'm not sure exactly how it works on Binance or what the conditions are, but I know on some exchanges you set a slippage kind of max, or the stop loss doesn't execute if there's too much slippage. So if you set a slippage max of 10%, which in normal market conditions is very reasonable, you would not expect to 10% slippage from a stop loss. So maybe you're thinking maybe there's a limit there of 10%. If the price goes from above $2, which is where your stop loss is, down to 180 or below instantly, because there's no liquidity on the books, there's no buy orders between those levels, or there's not enough to fulfill your stop loss, then your stop may not execute, okay? In which case you're liquidated on 1.2x leverage. Even if you do have a stop loss at $2, okay? If there's no liquidity on the books, the next buy order that may be able to get filled by your market order to sell could be at 150, could be at 125, could be at 80 cents, okay? So when the books are thin, even those stop losses that any responsible active trader will set either may not trigger itself, or if it does trigger, it may trigger with, in this situation, something like 30 to 50% slippage. So even those traders that were actively setting stop losses and technically managing risk, if they did have positions on the wrong coins with enough size, their stop losses could have been made irrelevant and they would still have gotten liquidated, okay? Solana minus 40%, Celestia minus 60%, Dogecoin minus 55%. This is an example of some of the damage that was done. And Dogecoin is a top 10 coin by market cap, okay? And this all happened in minutes. So imagine a top 10 coin by market cap losing 50% of its value in minutes, okay? Again, if you were using, in the case of Doge, if you were on a 3x leverage long, which in normal situations I would think is pretty safe, you got liquidated. If you were on a 2x leverage long, you probably got liquidated. And that's how drastic this move was. And again, this is 5 altcoins, but this is some of the biggest altcoins. Again, we have a top 25 here and a top 10. I think Doge is still a top 10. This happened across the board on hundreds of altcoins. Okay, so if you were in sizable position on any altcoin, especially one that was not in the top 25 or top 50, there's a good chance that you were liquidated, even if you had your stop losses set, even if you were using a low amount of leverage. And that's what makes this crash so different from prior ones. Okay, a lot of posts like this on my feed, one after the other. I got fully liquidated for a total of 400K. Stops were in place, but the dump was so quick they didn't trigger. Perfect example of what I was just describing. I now have 7 sold to my name. Wish you all the best, okay? It's very unfortunate. It's very unfortunate that this happened. And again, it's unfortunate not just because traditionally these types of liquidation cascades will take out those that are irresponsibly using leverage, 10x, 20x, 50x, or those that aren't using stop losses. It was unfortunate because this didn't just affect those people. This affected almost everyone using any sort of leverage, unless they were using leverage on Bitcoin or Ethereum, which held up really relatively well because they're a lot more liquid. But if you were using leverage on any number of altcoins, you pretty much got wiped out. Here's another one. We're all trying to compare different days, but there's no reason for it. Yesterday was by far the biggest shock in crypto history at a time when we were talking about the maturity of the space, bridging the gap between TradFi and crypto, and it started getting lazy with leverage, okay? This is an example of some of the other prior crashes, okay? Our crash yesterday was this right here, this bottom right quadrant, okay? I'm not sure exactly if this 2020 was the COVID crash, maybe 2021. These are all other major instances of massive liquidations. You can see here the average drawdown, okay, it was 30%, and the top 10th percentile, the biggest drawdown was 53%. In 2019, average drawdown 40%, worst 10 percentile 56%. In 2022, average drawdown 17%, 10th percentile 27%. Yesterday or the day before, average drawdown 63%, okay, with the worst 10% of coins drawing down 85%, okay? So this was by far the biggest liquidation event that we've seen in history, not just in nominal numbers, not just in the dollar amount, but also in terms of percentage of drawdown on many of these alts. If the average drawdown on these alts was 63%, and this is measuring, it looks like N is 1578, so I'm guessing 1,578 altcoins. If the average drawdown was 63%, anyone using 2x leverage, which is considered a relatively low amount of leverage, would have gotten liquidated, okay, on the average altcoin. In all of these other 3 instances, if you're using 2x leverage on the average altcoin, you would not have gotten liquidated here. You would not have gotten liquidated here. You would not have gotten liquidated here. You would have gotten liquidated here. So this was, again, in terms of the amount of damage that we saw here, unprecedented. And even those who believe that they were being responsible with leverage and using low leverage longs, like a 2x, could have gotten liquidated here. A lot of them did. And that's what makes this so different from prior corrections and crashes. You can see here, this crash exposed how thin centralized exchange order books were. Atom went down from $4 to a penny, or less than a penny. And this is a chart of Atom, right? We saw this wick down to essentially 0. And this is what I mean by, like unprecedented scale. Some of these posts, I believe, are like engagement farming. So don't assume that every post that I show here is legitimate, because some of these people are looking for engagement. But we'll show you some other statistics and data that proves that this stuff is actually real. Even if it didn't happen to this particular individual, this type of stuff happened across the board. Profit and losses of negative millions. It's pretty crazy what we saw. So here's another one, lost 1.5 million on TON today. Wasn't gambling with crazy leverage. It was a safe, quote unquote, safe play, just 3x, right? So we talked about how those 3x and 2x leverage got liquidated. And again, this happened in minutes, so it was not much could have been done. Had 4 conversations with friends that lost a lot of money yesterday, probably 50 million in total. Again, the sad thing was many were in safer leverage positions, simply to farm points on dexes. Think 1.3x leverage. Again, this is exactly what I mean. Even on 1.3x leverage, you would have gotten liquidated, which is barely any leverage, which is barely any at all. This is almost equivalent to a spot position. You might as well have been in spot, but it looks like they were farming points or doing whatever, and so they had low leverage Positions which, in theory, the idea is they will not get liquidated because we shouldn't expect to see 80% drawdown within minutes on altcoins. It just doesn't, or until now, has never happened in almost a decade in the entire existence of this space. But yeah, and boom, in 5 minutes, wiped out, right? Fortunately, this is like 1 or 10 legs of each of them, and if they made it before, they can make it again. This is the one thing that we know, those of us who have been here since 2017, we understand that if you, I mean, we've been through these types of bumps. Maybe not one as this damaging, this drastic, but we've been here before, and we'll make it back. We hope, of course, but we work our asses off and we do it. And so it's part of the game here, guys. It is part of the game, as unfortunate and crazy as it sounds. And if you don't want to take part in any of this game, your best bet is to simply buy spot, hold it, not touch it, and don't mess with it, and just invest. But as a trader, if you're actively trading, then leverage is a tool that active traders use. Now, there's a way to use it, and there's a way you don't use it, and you have to learn the difference. But in some cases, this was something that even those, again, safe traders were caught off guard by. And again, once in a decade sort of situation here. But let's talk about what exactly causes a 98% drop in a top 10, top 25 altcoin, right? So again, the thing you have to understand is that the order books, most coins have market makers managing these order books. Essentially, what market makers' job is to do is to provide liquidity on the buy and sell side of the order books, right? So when an average Joe like me wants to enter or exit a position in this coin, will buy or sell, the market makers will take the other side of the trade, and they'll make money in different ways, through spreads, through rebates on volume from the exchanges. Their job and what they're being paid for by the exchanges, or what they're being paid for to do, is to essentially provide liquidity in the order book so that people can easily enter, exit, trade these assets. Without market makers market making, liquidity on these books would probably be very thin, because the average person, if a coin is trading at $4, the average person is not layering buy bids from $0 to $4 every 3 cents up. That's not how an average trader thinks or works, right? So what these market makers do is they then, again, ladder bids in the books. Obviously, they concentrate liquidity in key areas, and they fill those books up with buy and sell orders to allow the active movement and buying and selling of coins, almost like a middleman between the actual buyers and sellers who are doing this, retail or other entities. And so they provide liquidity, okay? I don't know, and there's speculation about market makers pulling liquidity on the books for whatever reason. I don't know if that's true or not, okay? What I do know is that for whatever reason, the books are thin enough to allow 90% drops. That means that there was not much liquidity on the books. Could that have been because market makers pulled orders at some point? Sure. I don't have any proof of that. To me, it doesn't really matter too much. Again, we enter these markets, we trade, understanding that there is some level of risk. But something happened, something or the other happened where liquidity from the books just wasn't there to handle the selling. And so we saw massive liquidations. Again, here's a stat that this is another one, lost 9 million. Again, another example. Guys, these stories are very common right now on the timeline. And again, if this was you, if one of these was you, I understand your pain. I took the biggest hit I've ever taken as well. So I understand the pain, and it does suck. But again, there's no bailouts here, right? We don't have a choice but to keep at it and work harder. And again, I always advocate keeping spot and trading portfolios separate. This is kind of the reason why. So if you haven't been doing that yet, I recommend doing that moving forward. But yeah, I understand what everyone's going through, and it's a tough time, but it will get better. The markets will recover, and we'll talk about that a little bit later in the video. But here's some statistics. 1,010 traders that are down 100K plus today. 206 traders that are down 1 million plus today on Hyperliquid. This is just one exchange, and it's obviously the decentralized exchange Hyperliquid. It's not the centralized exchanges, which had a lot of damage. 358 of those accounts lost everything and have zero balance, including one person who lost all 19 million plus in their account. So 358 of these accounts that are down at least 100K to 1 million, 358 of them got completely wiped out, okay? And here you have the biggest losses in 24 hours, 60 million, 35 million, 20 million, 19 million, 19 million, 18 million, 18 million, 18 million, 17 and 17 million, right? Minus 80%, minus 40, minus 100, minus 90, minus 100, minus 100, minus 100, minus 100. These are people that lost, I mean, tremendous amounts of money. And this happened not only to the big guys, but it happened to a lot of little guys as well. It happened across the board, basically to anyone that was using, again, leverage or margin on any of the less than major or any of the less than, I guess, less liquid alts, which was pretty much anything that wasn't a top, I guess, 5 or 10. And even some of the top 10s, as we saw with Doge, got hit for 60%. So again, this is to say that this was the worst liquidation event we've seen in this space. Okay. If you got liquidated, you are not alone. You're with a lot of us. All right. You're with a lot of us. And at least you can take solace or comfort in the fact that it wasn't necessarily something that could have been prevented if you're an active trader and you were doing everything right and this happened. It wasn't just you. It was almost everyone. Okay, this was a major event. Just for again some context, the COVID crash had 1.2 billion in liquidations. FTX crash had 1.6 billion in liquidations. This crash was 19.16 billion in liquidations. Okay, nearly 10 times more than the COVID crash and about 8 times more than the FTX crash. Okay, with all that being said, now that you guys understand the scope and the scale of this, of what happened, hopefully, if this happened to you, you're not feeling as bad because it happened to everyone. And there wasn't much that could have been done, even if you had been extra careful and you were on 1x leverage or 2x leverage, or you were using stop losses. If you didn't do any of this and you got liquidated and you're thinking, damn, I could have avoided this. This is kind of what I'm trying to get at, is that, even if you were on 1x leverage or 2x leverage, or even if you had your stop losses set, there's a decent chance you still wouldn't have avoided this. So it was almost an inevitability because of what happened, because of how bad and how drastic this crash was. And hopefully that makes you feel a little bit better, okay? With that being said, this is a great example of why you should keep spot and trading portfolios separate moving forward. This is a good example of why now at this point, I think it's safe to not assume that 2x leverage positions are safe. That taking big positions in relatively illiquid coins is safe, even with stop losses. This is a good lesson moving forward to keep in mind when you do continue to trade, and you think about, maybe it'll make you think twice about doing these things again, because this situation, as crazy and drastic as it was, and as hard as it is for me to see happening again in the near future, we know it's now possible. And this is something we didn't know because it had never happened before up until this point. So with that being said, guys, let us go ahead and jump into some of the questions that I got under the tweet that I made a couple of days ago. And we will see if I can hopefully help you guys make sense of some of this price action. Okay, so here's the tweet that I posted, and you can see the questions below. I'm just going to scroll down here and we'll talk about different things that I see, different questions that I think are worth answering. One more thing that I do want to add is part of what caused this big crash. We talked about how there might have been an issue with market makers, or maybe liquidity was pulled from the books. But the other big factor here, which I think is the core of all this, is that a lot of these major exchanges, these centralized exchanges, Binance, Bybit, they allow you to use other altcoins, aside from USDT, aside from stablecoins. They allow you to use other altcoins as collateral to back your leverage positions, okay? I won't pull it up right now, but you can look for yourself. On Binance, there's a theory that I read where they let you use USDE, which is like Athena's, I guess, USD coin. And that is supposed to be pegged to $1. Now, on Binance, and this is what the tweet said, and I need to find it actually. Here's the trade. I went ahead and found it. And just so that you can better understand, rather than me walking you guys through without having a reference, this is one theory about what happened. And I don't know if it's true or not, but I'm just trying to give you guys an example of how this stuff happened. So this was the theory that roughly 60 to 90 million of USDE was dumped on Binance. Okay, USDE is Athena's stablecoin, which is supposed to be pegged to $1, right? Along with some other coins, okay? Exploiting a pricing flaw that valued collateral using Binance's own order book data instead of external oracle. So basically what they're saying here is that the values of these coins are allowed to be used as collateral on Binance. You're allowed to use USDE as collateral, okay? You're allowed to use wrapped WB Ethereum, whatever that is, some sort of wrapped Ethereum, and you're allowed to use some sort of wrapped SOL, okay? I also want to add that typically these exchanges, when you're using collateral, they'll allow you to use, usually USDT is a standard. USDT pegged to $1, that's usually your collateral, right? Your collateral, again, backs those leverage positions that you have open. So one theory is that this guy's saying this is what happened. I don't know if it's true or not, but it makes sense if it were to have been the case. Binance allows you to use USDE as collateral, again, normally pegged to a dollar, but they base the value of this collateral based on their own order book data instead of external oracles. So a lot of these exchanges will use external oracles for price data, right? Meaning if there's a variance in one single exchange because some big guy dumps a bunch, it doesn't affect positions because they're not referencing that price on that exchange. They're referencing an index or an oracle price that references an index of exchanges so that you don't get those variations from individual exchanges. But in this case, he's arguing that this caused a depeg and allowed USDE to drop down, I think, 65 cents. Okay, so think about it like this way. If you have, right here, during that window, sophisticated actors manipulated Binance's order books, dumping 60 to 90 million of USDE, driving it to 65 cents on Binance only. It was still a dollar elsewhere, okay? Because the unified account on Binance marked collateral to internal prices, this instantly wiped margin value and triggered 500 million to 1 billion in forced liquidations. What he's trying to say here is if you were using USDE as collateral on Binance, okay, theoretically, normally it's valued at a dollar. If you had that backing your leverage positions and some guy did this, dropping the price of it on Binance only to 65 cents, if Binance is referencing its own spot price on this market as a reference for your collateral, then Binance would then say that, well, your collateral was a dollar per coin, now it's 65 cents per coin. In other words, your collateral just dropped by 35%. That could cause a liquidation because you have 35% less collateral backing your open leverage positions. When that number gets too low, you get liquidated. You force sell your assets to cover the difference. And so the argument here is that this depeg on Binance only caused Binance to reference collateral of this asset, cause a drop in collateral value on some accounts by 35%, and that caused a bunch of liquidations, and this started the cascade that we then saw. This is one theory about it, okay? I don't know how true this is, and I don't use Binance myself, so I don't know if this was actually the case. I will say it did seem like also on Binance did get hit the biggest, and so there is that. But you guys can read this post if you want a little bit more details on that, okay? What I will say is, even if this was not the case or is not what started the liquidation cascade that we did see, the reality is that exchanges like Bybit as well allow you to hold collateral not just in USDT, but in a number of alts, okay? We're talking about hundreds of alts. And I'm not going to pull up the list, but there's a list for Bybit, which is what I use. And they allow you to use XRP as collateral. They allow you to use Cake as collateral. They allow you to use FXS as collateral. They allow you to use CRV as collateral. They allow you to use pretty much any coin you can think of as collateral, okay? Now, they don't value all that collateral at face value because they understand that alts are volatile. And so if you are using CRV as collateral, maybe only 80% of that value of your CRV will apply as collateral, okay? So there is that little caveat because they understand that the price fluctuates so quickly, they can't give you 100% of value for your collateral because before they can sell it to collect if they need to, the price may dump 20, 30%. So they can't give you full face value for it when the price is that volatile. But my point is that most of these exchanges allow you to use other coins as collateral. What this means is that if you have a cross-margin account, meaning if your entire trading account is backed by these types of volatile alts instead of a stablecoin like USDT, in the event that the value of all these alts begins to fall together, the value of the collateral that's backing your leverage positions can begin to tank very quickly. Okay, if you're using USDT, this doesn't happen because that value will always stay at a dollar unless there's some massive depeg. But generally, the value will stay at a dollar. If you are using, for example, let's just take XRP because I remember it dropped down to about $1.20 during this crash from $2 and some change. So XRP, again, one of the biggest coins in the space, top 5, dropped over 50%, right? So this is a great example. If you're using XRP as collateral, which let's say you had $1 million of collateral in XRP at $2.50, which is where we were at, $2.60 before the crash. XRP went down to $1.20. So if you were using that collateral, you had let's say you had $1 million of XRP as collateral to back another $1 million position that you had a leverage long on. Within minutes, the value of your collateral would have went down from $1 million to 500,000. Okay, which means that the collateral backing your positions just got cut in half almost instantly. This is likely to cause a liquidation on someone even using 2x leverage. And that liquidation, when it happens, means that your XRP, which was the collateral, is now forced sold on the market. Stick with me, guys, because this kind of ties it all together. So when it's forced sold on the market, what happens, right? It pushes price down because this is now your spot collateral XRP being forced sold by the exchange on the market, pushing price further lower. And so this causes price to sink even faster. And so now you imagine, now replicate this with hundreds of altcoins that are being used as collateral across hundreds of accounts. And so when this liquidation event started and began, if a few accounts were using these coins as collateral and they were forced to liquidate, that means all of their spot holdings in these relatively illiquid alts was then forced sold on the market. That caused the price of these altcoins to fall further on the market, which triggered a drop in collateral on other accounts, right, that were also leverage trading, and caused them to force sell their assets on the market, their spot coins, which caused a further drop in price, which caused even more liquidations. And now you have a massive liquidation cascade that drops altcoins across the board anywhere from 60 to 100%. And that is exactly the core of what happened, in my opinion, is that relatively thin books, but more importantly, cascading liquidations of altcoins because of cross-margin accounts using leverage and using these altcoins to back their leverage positions. So when the positions began to fall, when the value of these altcoins began to come down, the value of their collateral came down, the liquidations began, causing more forced selling of these altcoins, causing more liquidations from other accounts, and pretty soon, before you know it, nearly every single person using leverage or margin on these accounts is liquidated across the board. And that is what led to this massive, massive drop. Okay, so that is kind of the gist of what happened in the internal behind the scenes, okay, and what caused this at its very core, okay, at its very core. So with that out of the way, I know I went on a little bit of a rant there, but with that out of the way, let's go ahead and take a look and answer some of the questions that we got over the last 24 hours. Okay, first thing here that I want to highlight because I think it's important. This guy asked me, is HBAR dead? I've got such a massive bag of it and I'm terrified I invested in the wrong thing this entire time. My response, if you don't have any confidence in it as an investment, sell it and buy something you do have confidence in. And I'm repeating this on this video because I get this question quite a bit. Look, guys, I still hold my HBAR. I still like HBAR. I don't think anything has changed with HBAR. My targets are the same. Nothing has changed because of this drop. In fact, it's holding up fairly well compared to some of the others. But if you have to ask me this question, is HBAR dead? The first thing that tells me that you know nothing about HBAR, right? You haven't done any research. You haven't taken the time to understand your investment, because if you did, you know it's not dead. Nothing has changed fundamentally, and the chart is certainly not at zero, so no, it's not dead. If you're terrified that you invested in the wrong thing, that means, again, you haven't done your research. Look, guys, I share my investments. I share my ideas behind my investments, but I've done the research. And so the confidence that I have comes from understanding my investments and doing that research. If you're not going to do that research, you're not going to understand the investments that you're buying, you're not going to make it here. You have to take your own time to do your own research on any asset. Now, don't just buy it because me or anyone else on the internet tells you that it's good. Do your research and make sure that you understand why it's good, why we are saying it's good. Don't just take our word for it. Do your research. Because at the end of the day, the only way you're going to be able to hold from these lows for 10, 20, 30x in the future is if you understand what you invested in and you're confident in, and you have the ability to handle these ups and downs. Otherwise, you're going to be like this guy who's terrified that he invested in the wrong thing this entire time. And you might make a silly decision, decide to sell at the bottom because you're terrified that you made a wrong decision. Again, because you haven't done your research. So I just want to highlight that because I get that quite a bit, surprisingly, from people that are asking me if the coin that they hold is dead or if the coin that they hold is the right choice because they don't know why they're holding it. And that should never be the case. Let's continue on. Can we discuss your individual sell strategy based on what you see when you might unload, how much at a time, and how to recognize a parabolic move? Not necessarily targets, but strategies to exit. Good question. Guys, just to make it very, very simple, my strategy is exit after the Bitcoin top, after that alt season that happens. Because again, like I've said for so long, the biggest runs in alts, the biggest moves in alts, the biggest alt season isn't really going to happen until Bitcoin tops for the cycle. So my strategy is simply wait for that top, wait for the alt season that follows, and after that, at that point, at some point, take profits, right? I have these targets that I've had for years now for the end of the cycle. We are approaching that point in the coming months. Bitcoin has not yet topped, in my opinion. We're chilling at 120K right now, 114K. There's no indication that a top is in at all whatsoever. And I've discussed in prior videos, so I won't go over it again. But the point is, in my perspective, the way I see things, if I'm selling and taking profits here on altcoins, I'm doing that before I've even given them a chance to really make the moves that I'm expecting, right? I'm expecting all these moves to happen, but I've always expected them to happen after Bitcoin tops because that is when money rotates and liquidity flows to altcoins. There's no reason for me to start taking profits before that moment happens. When that moment happens and things start moving, if these coins don't make it to my targets that I've set a long time ago because of developing price action, or if I see something in developing price action that makes me change my targets or makes me question whether we can get to those targets, I will sell before those targets are met. But at the end of the day, none of that even comes into play or even comes into question until Bitcoin has stopped. And so I get people a lot of times asking me, has this changed your targets for your end of cycle targets? Has this changed your expectations for XRP or for CRV or for CVX, etc.? No. And nothing will until Bitcoin tops and I see how price action develops. And at that point in time, if we don't get the moves that I was expecting in the time that I was expecting them to happen, which is post Bitcoin top, then maybe I will adjust targets or take profits sooner. But until that point happens, there is zero reason for me to be adjusting targets when the context of those targets has not even yet been met, if that makes sense. So hopefully that adds some insight into this. I'm not even worrying about taking profits right now. It makes no sense for me to do so. Bitcoin hasn't topped. And until that happens, the question doesn't even arise. Are we still in a bull run? If yes, why? Yes, we're still in a bull run. Why? Because Bitcoin hasn't broken any sort of high time frame market structure. We'll talk about that a little bit later. But yeah, just quick answer to that question. When the dust settles and we look at taking trades, how would we know where or how to play the trade? With invalidation that isn't 30 to 50% away from entry, as most high time frame structure and most alts got damaged with yesterday's price action, would it make sense to play the charts as usual with high time frame demand and supply? Or would yesterday's PA throw a spanner in the work? Examples would be CRV, CVX, FXS. So good question, and this is a great question, right? We know that on some of these coins, and we'll go to the coins real quick here. Bitcoin looks relatively good. Actually, I mean, depending on the exchange you're looking at, on Coinbase only wicked down to 107. On Binance, I think hit 104 or something like that. But relatively healthy, right? It was mainly alts that got damaged in this correction, and Bitcoin looks just as great as ever. It did hit 108 on Bitcoin. We'll talk about the implications a little bit later, but overall, nothing to be concerned about here on Bitcoin, and even Ethereum looks fantastic, really. But the question was about like alts like CRV, which again I'll go into more depth a little bit later. But obviously, coins like CRV did break structure, right? CRV wicked all the way down to 0.18, and again, this isn't a testament to CRV specifically because we know that most alts went down 70% on average, and a lot of them went down to zero. Okay, CRV didn't hit zero; it hit 17 cents. So in some ways, it fared better than some of the other alts. But again, this sort of a move, which broke all of our structure that we were relying on to take trades or to take entries, it has damaged structure a lot. And there's not much that we can do about it. And now you're thinking, well, if I want to get into a trade here, does that mean I have to set my stop loss below 17 cents? And if I do that, well, that's not a very good risk to reward because that's a stop loss that's 70% lower than what we are at now. And that's the reality of the situation. The answer is that you can't really take a trade with a stop loss 70% lower. It doesn't make any sense to do so, which means you have to wait for lower price action to develop, right? We have to wait for something on the lower time frames to allow us to identify a lower time frame area of invalidation. We can't rely on this giant wick, even though we will not see that level again, in my opinion. I'll talk about that more in the video as well, but we can't really rely on this sort of a wick. And so we have to wait for lower price action to develop before entering a trade, which just means be patient. We have to be patient and wait for a nice setup to present itself. Right now, we don't necessarily have that, right? Because we're still letting the dust settle from this massive liquidation event. So that was a good question. There's the answer. We just have to be patient and wait for a better setup on lower time frames. And I will also say, in general, guys, we'll come back to this here in a second, but really quickly, a couple of things I want to emphasize before moving forward again. We are not in a bear market. Okay, this was not the end of the bull cycle. Bitcoin looks really healthy. Ethereum looks really healthy. A lot of coins look really healthy. A lot of coins look like trash, but that's because of this massive liquidation event, unprecedented. It doesn't change. It didn't whisk us into a bear market. Okay, that's not how these things work. Bitcoin hasn't broken high time frame market structure. Again, we'll talk about that here a little bit later. But kind of what I want to emphasize, and this tweet kind of drives the idea home. These events, when they happen, guys, these are bottoming events. These are not events that mark tops. These are events that mark bottoms. Okay. This sort of panic that we're seeing, that now we're in a bear market, that everything's over, it's the end. This is the same exact panic we saw when Bitcoin is at 15K, where I was very, very bullish. The same type of panic we saw when Bitcoin was at 3K in 2018, where I was very, very bullish. The same panic that we saw during the COVID crash, where Bitcoin was again at 3K and some change, I believe, in 2021 or something like that, where I was very bullish. I mean, we've seen this time and time again. When people panic like this because of forced selling, because of forced liquidations, those are bottoming events. You can look at any of these events, the COVID crash, you can look at the FTX collapse. All these events were bottoming events because we had massive liquidations that forced people to sell at levels they would normally not sell at. And because of that, once price rebounded, it cannot return to those levels because those are not sales from willing sellers. Those are sales from people that were forced to do that because of leverage. The leverage has now been wiped out, meaning it's essentially not possible to get back down to those levels because, again, we don't have the leverage in the system to cause another wipeout and to cause that forced selling to happen again, right? It's over. So these are bottoming events. They're not top events. So if anything, people are saying that we need to fill the wicks. Guys, the only reason we wicked to 17 cents on CRV is because a bunch of people got liquidated and were forced to sell their spot CRV that they wouldn't normally have sold. You're not going to get down these levels again unless you get another forced liquidation. You're not going to get another forced liquidation because everyone's been liquidated. There's not enough leverage in the system to cause this sort of a move. Again, this was not an organic move. It was not a naturally occurring move. It was not panic selling. It was forced selling from people who didn't have a choice because it was out of their hands because they got liquidated on leverage. That leverage is all gone. We cannot repeat that instance right now unless we build back up $20 billion of leverage in the coming days, which is not going to happen. So it's not going to happen. We're not going to see those levels. Now, on a coin like Bitcoin, where we had, again, a wick down to 107, a wick down to 102 on Binance, on a coin like this where we didn't see these massive liquidations, right? Yeah, we could visit the lows again. I wouldn't rule that out. Maybe something like this or a quick wick below and a reversal. I won't rule that out. It's also possible, of course, that we don't visit the lows and we see kind of something like we saw at 3K back in 2018, I believe it was, when we went from 3K to 14K, back down to 3K. Let me quickly show you guys what that looks like. I'm referring to this right here. 3K to 14K, our first impulsive move. Massive crash. This was in 2020. This was the COVID crash, I believe. Went down to 3.8K, went a little bit lower at 3.4K on some exchanges. And then we saw this kind of choppy grind up, choppy rise up, and that ultimately resulted in the next impulsive move to 60K. So my assumption is that we're probably going to see something like this across most alts, okay? Meaning that these levels that we reached on their liquidations are not going to be remet. Why? Because they can't, because we don't have that leverage in the system anymore, and we don't have that forced selling anymore. It's already happened. Everyone's been wiped out. So you can't expect these lows to be met, okay? We had a similar situation back here during the COVID crash, or this is the BitMEX crash, one of the crashes, whatever it was, similar situation where it was forced selling down to these levels. We cannot get back there, okay? It just reasonably it's not going to happen. It doesn't make sense to do that. And so my assumption is most alts are going to look something like this, where we had these massive liquidation events, price is going to kind of grind up. Maybe it consolidates and chops around lower here before turning up, but ultimately I think we're going to get a grind up higher before we ultimately reclaim those levels that we broke down from, and then we'll finally recover and get the impulsive price action to the upside. That is going to be the case, in my opinion, for most alts. For some coins like Bitcoin that didn't make such drastic moves down, Ethereum also looks freaking fantastic. We held a high time frame zone on Ethereum. We didn't even break that, right? I talked about a wick into the blue zone earlier. I tweeted about that like 2 days ago. We wicked into the blue zone, exactly what we would have expected to happen without a mass liquidation. So something like Ethereum where we didn't get those mass liquidations, okay, then it's reasonable to say, yeah, we might see something like this. We might go lower. It's possible. But on something like CRV and for a majority of these altcoins, these levels are not coming back, guys. I don't know what else to tell you. Like that was it, okay? This doesn't mean open leverage longs again and it's at stop losses at 18. We learned our lesson about not doing that. That's not what I'm trying to say. What I'm trying to say is that if you're waiting for 17 cents to buy spot CRV again, you're probably going to be waiting for a very, 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 very long time, if not forever, okay? So in general, that was the worst. The worst on most of these alts is over. We don't have the situation or the context or the scenario in which this is reasonable to expect anymore. That was it. That was a one-time black swan event, and it's done now, okay? So with that being said, let us go back to the questions that we had, and we'll continue on. Okay. Does the move off 108K, which you marked on daily, invalidate since it only wicked below? I am seeing different opinions as to if Alleywave gets invalidated by wicks or no. So in general, I would consider it invalidated myself. But again, and we'll go over this quickly because I wanna go over this more in another video or at the end of this one, depending on how long this takes, like I mentioned at the beginning of this video. But the impulsive move that we had highlighted here, again, the idea was that as long as we hold above 108K, this impulsive move remains intact and we continue higher impulsively, right? 108K has been breached, okay? So what that means is that this impulse was invalidated. I understand it was just a wick, but we're talking about the origin of the impulse, key level of market structure by my method, and so a wick does technically invalidate it, okay? But what we have to keep in mind is what this means is this lower time frame impulse that we had off of 108K was invalidated, but it doesn't change the fact that the higher time frame impulse off of 74K was not, right? It was actually a really not very aggressive move on Bitcoin compared to the rest of the market. So the high time frame structure has not been invalidated, and just like before, it will not get invalidated unless you break below 74K, and we're not going to do that in my opinion. So this doesn't change the high time frames. All it does is it kind of resets the momentum we had going on the lower time frames. Okay, so that's what it means. It means that high time frame structure has not changed. Lower time frame structure specific to this impulse at 108K has been invalidated, meaning the momentum we gained off of this level to go up has been reset. Okay, but the higher time frames have not. And even we can go as far as to say, well, again, 105K, which was, if you guys remember from my last YouTube video, the scenario 2 that we talked about, with this being an impulsive move, right? We had the 5-wave move off of this level that we talked about. This was our scenario 2. This move, again, on Coinbase, we still didn't even hit 105K, okay? So theoretically, this move was invalidated. This impulse remains valid technically on Coinbase. We didn't hit this level. And so this is still extremely bullish. Like, I don't know how else to put it. We didn't break market structure on Coinbase, at least on this level. Now on Binance, we did wick below. And on Binance, where did we end up when we wicked below? We ended up at the next area of interest that we had talked about as well in some of my prior charts, which was this cluster of consolidation right here. And on Binance, we wicked into this. So if I can go to the Binance chart real quick, here it is. Oh, Binance, sorry, we wicked into that cluster of consolidation, right? So we wicked below 105, right? And we wicked into this cluster, which is another key level that we had marked off, and we bounced off of that. So again, on Binance, you'd argue that the higher time frame structure has not been lost. This lower time frame impulse for 105 was invalidated, so momentum was reset there. But basically what we have here then is we have our 5-wave move here off of this low. This is all one ugly giant correction, right? And then we're waiting for the next impulse up, basically. So essentially the momentum reset for the potential impulses we had in this region here. But the higher time frame momentum has not been reset, and we got a nice retest of a logical area, and we bounced really nicely off of it. So Bitcoin looks fantastic for all intents and purposes. It looks really good. And so again, this is to emphasize that the bull market is in full swing. And just like our COVID crash on Bitcoin, just like the FTX collapse on Bitcoin, just like every other massive liquidation event on Bitcoin that marked a bottom, this massive liquidation event on altcoins is marking a bottom in my opinion. And so if Bitcoin is not really structure is not changing the higher time frames and it's still in a raging bull market, altcoins will follow, right? They just saw massive liquidation events that probably marked their bottoms before markup, just like we saw in Bitcoin at 3K before it ran to $120,000. So do not be fearful right now, guys. Do not panic sell. Do not make stupid decisions here when market structure is extremely healthy on higher time frames on Bitcoin, and altcoins have just put in what is essentially a capitulation bottom before a rise. That's all there really is to it in terms of the bigger picture, and that should be your takeaway. In the big picture, is this is not a place to be selling or panicking or being fearful. You just got through the worst event in history, and it's pretty much only up from here, in my opinion. Okay. With that being said, there's nothing to stop us from getting some chopper consolidation on Bitcoin further before a resumption of the move to the upside. Okay. And again, like I said, with Bitcoin, because it didn't have such a massive liquidation like altcoins, maybe we do bleed back down to these levels. We can't necessarily rule that out, right? My point though is that this is a very healthy looking chart, bottom line on Bitcoin. And again, altcoins cannot revisit those lows for a lot of them. So there's nowhere to go but up from here. Okay. Unless the altcoin is fundamentally flawed, and that's a whole other story. And what I mean by that is if the altcoin is simply surviving or has been surviving up until this point on attention, and that attention has moved elsewhere. Okay. Altcoins essentially with no utility or value or any fundamental reason to move up again. If you're holding an altcoin that is fundamentally strong or that has a reason to exist, then it's probably going to rise with the rest of the market in the coming months, okay? So that's that. That's an answer to that question there. Cover your post-2018 launch first bull run theory. Would love to hear why 2021 is truncated, also why this liquidation is not similar. I covered this in prior videos and updates, so I won't spend too much time on it now. We'll continue on to the other questions. The answers are there in my YouTube videos. I talked about why 2021 is truncated. I talked about why it was a mid-cycle top. I talked about why we were expecting this wave to 100K plus, even though we dropped down to 15K. It's all been covered in past YouTube videos. That idea has not changed. Now that lots of impulses are invalidated, what type of price action do we need to see for solid recovery, another new impulse, else, or just time? We will need some time, guys, for some of these altcoins charts to recover. I'll just use CRV example since that's one that obviously many of you pay attention to and that I focus on quite a lot. We might need some time. There's many ways that this can happen. We don't know what's going to happen. We could get literally we could get just like a V reversal. Okay, we could get sort of grind up like we saw it on Bitcoin in 2018 or whatever that was, and I just showed you guys the example from 3K where we kind of grinded up and reversed. This is reasonable to expect, something like that. Okay, we can't rule that out. And especially now that we got this massive liquidation and shook everyone out, finally, guys, now we may be able to finally make that move up to $2 to $2 to $3 finally, because we've now seen a selling climax. This was capitulation, nowhere to go but up. The only question that we have now is how long will it take, right? And again, we could see something like this where it's a relatively choppy or relatively quick grind to the upside, and we just kind of go like this, and then we consolidate, and then we rip. We could see something like this where we go up, we reject, we come back, we fill part of this wick. Again, I'm not expecting all of it to fill. Consolidate, and then go up. There's many ways that this can happen. We just need to have a little bit of patience and wait for lower time frame structure to develop. Maybe we get, I mean, this is one example of sort of a choppy grind up, but who knows? Like we could even get, which would be like a very aggressive V reversal, would be a relatively impulsive move up, where we get a clean 5-wave impulse of aggressive buying. And that would be the best case scenario, obviously, because it'd be impulsive moves are always nice to see. So maybe we get something like that, right? And if we get that, then we have a confirmation with a new impulse off of which to base our low time frame invalidation, and a new impulse to suggest that the momentum has come back and we're ready to continue markup. So a number of ways that we can recover from this. But yeah, we just need patience. If you're in spot, you just need patience. You've gotten through the worst, and these will recover, in my opinion. Everything, almost everything will recover. That has some reason to recover, of course. And again, by that I mean something that has fundamental value, which is why I only hold altcoins in spot that I think have fundamental value. Likely goes without saying, but touch on XRP, CRV, and HBAR and dig into their respective pairings. I want to spend a lot of time on this, so I will probably make a new video because this one's actually now taking quite a bit of time. So I will make a new video within the next 24 to 48 hours that specifically talks about key levels on the coins that I track. And that we'll talk about the Bitcoin and Ethereum pairings as well because they're all relevant. So we'll go into that. Let's see what else. Curious what triggered this and if we can see it before it happens again. Again, refer to the beginning of this video where I basically explained what triggered this. The only way that you can kind of anticipate something like this happening is keeping an eye on open interest, specifically for altcoins. Anytime open interest rises high, relatively high, it implies that there's leverage in the system, right? And whenever there's leverage in the system, it allows for something like this to happen. Of course, not to this extent is not what we normally expect, right? But this is a wake-up call that even these types of deleveraging events are clearly possible. And so keep an eye on open interest. That's the bottom line. Open interest is a measure of the amount of leverage in the system. So when it's higher, the likelihood of these types of flushes increases. And when it's lower, the likelihood of these types of flushes decreases. So pretty much OI, open interest, is the best indicator to watch for some sort of an advanced warning that something like this might happen. Should we ignore the wick and do TA with the closed candle? This is a great question as well. Not quite ignore the wick, but put more importance at this time on candle high time frame closes, right? So you'll see here, I'm just going to use CRV as an example, but what I mean by put more importance on higher time frame closes is when you get such a liquidation wick that you know is not organic price action, that you know is forced selling, that you know is a market-wide black swan, you want to focus on horizontal support and resistance levels, horizontal levels and higher time frame closes to measure the actual damage of this, because any liquidation wick is going to look ugly in a chart, but after you've given it some time to play out, the move to play out, where depending on where buyers step in, the closes on the higher time frames will tell you where buyers are actually interested in buying this thing. The recovery will tell you where organic price action, organic buying has occurred that kind of invalidates or plays a more important role than these giant wicks. And so you're looking at high time frame levels at this point, guys, and one easy way to view this is what's the most important area of support on this chart on the higher time frames. Just zooming out, we would argue that the cluster of consolidation at the lows here, okay, this is the most significant area of support. So if I just extend this out, this is just a very general way of how to look at these charts. If I extend this out, you'll see right here, very key, it bounced off of it and we reversed. Right here, we wicked into it. And look at that, right? Perfect example. We wicked to the very bottom of this zone and then we reversed. This is the most important level of support in the chart, okay? This level of support held, okay? What's the next level of support, important level of support? It's this consolidation where we had our triple tap that led to a reversal. We already tested it one time here, then we reversed. Let's go ahead and highlight that, okay? So I'm gonna highlight this essential range or triple tap here at these lows. This is the next most important area of support. And you can see here that our daily candle closed within it. So that's a good sign. If our daily candle closed down here, that would indicate that this area of support was lost on the higher time frames by more than just a wick, by more than inorganic price action, right? The move was devastating because of the wick, but because our candle closed down here, it indicates that there was such little interest in buying that this major area of support did not hold, aside from the wick. In this case, it did. So again, because we didn't close down here and we closed up here, that's a great sign, right? That's a good sign that this area of consolidation, this cluster consolidation or area of interest for buyers held at the close, right? Now we can even go further and go to the weekly chart, okay? And now you can see the weekly has an even bigger wick, and the weekly hasn't closed yet. We have about 5 hours to the weekly closes, okay? Where do we want to see the weekly close? Again, obviously in the green zone, and if it does, this chart looks pretty damn good. Why? Because we took these lows, we took these lows, we took these lows, we took these lows, and we ended up closing way above everything, right? This is just a massive liquidation flush, which we already know. But this is exactly what we want to see on the higher time frames, right? Cleared up all this liquidity, took everyone's stop losses here, okay? Mine included, because I had a position on CRV with stop losses here. I got stopped out. Took everyone's stop losses, even those that had stop losses at 21 cents. And again, this is why this was so brutal, because back here at 72 cents, if you're using 2x leverage, your liquidation is down here at around 35 cents, you were liquidated, okay? Back here at 70 cents, if you entered a position and you were using 1.5x leverage, we went down to 21 cents, you were liquidated. Again, this was just devastating, the amount of damage that this move did. But at the end of the day, if we close up here on the weekly, and more specifically, which this would be absolutely impressive, if we close above this wick on the weekly, if we close above 63 cents on the weekly in about 5 hours, that would be insanely bullish, okay? But even if we don't, this is a really good sign. Ideally, we want to close above this low here, which is at 48 cents. I think we probably will. If we can get above 63 cents by the close, even better. But this is how you want to interpret or how you want to analyze this stuff, because these wicks are going to ruin the lower time frames. You want to look at higher time frames, you want to look at the higher time frame closes, and you want to look at key horizontal levels, right, to map out what kind of damage has actually been done. And again, if we close above 63 cents, guys, I mean, that's one hell of a close on the weekly. And that would be extremely, extremely bullish. And it would just solidify the fact that we're going to see a V reversal, in my opinion. So keep that in mind. Of course, you can go up to something like the monthly. That would be the next level, but we have 19 days till that closes. So you can't really, you can wait for the monthly close, but again, you'll get earlier confirmation, or you'll get a more aggressive idea on the lower time frames, like the weekly, for example. Because by the end of the month in 19 days, if we get the weekly close above 62 cents, then by the end of the month we might be back above 80 cents, right? We might do a full-on V reversal. We might be much higher by the end of the month. So if you're waiting for the monthly close, you're trading off the extra wait for confirmation. You'll potentially miss a lot of upwards price action in that time. So it just depends on how aggressive you want to be. But again, I will say this, in my opinion, is a great time to be buying spot. I don't think we're going to come back down to these levels. There's no reason to. And we don't know if this is going to be a V reversal that just completely reverses in a number of days or weeks, or if it's going to linger down here. So again, DCA in for those that are looking to buy or asking me is a good time to buy. I would be if I had extra cash lying around. But I'm already fully allocated on spot to CRV, so it's not something that I would be looking to buy anyways right now. But if I was looking to add to my allocations and I didn't have as much as I wanted at this point, I would be buying here. Simple. I wouldn't care about 57 cents or whether it's at 48 cents or whether it's at 45 cents, which I may never get to. I'd be buying here, period. I'm not looking to save here when I know that we're not going back down to these levels, and what's likely coming next is a pretty aggressive reversal of the upside. And this applies to not just CRV, guys. This applies to pretty much every alt in the space, okay? If you want to wait for additional confirmation because you're worried, then wait for a reclaim of this zone here, which is now our new area of supply, okay? this area is going to be the theoretically should be resistance if we're going to consolidate down here longer, right? So you can wait for a reclaim of around 80 cents if you want to, okay? Personally, that wouldn't be my approach here. But again, if you want to wait for extra confirmation, you want to play it safe, this is the level that we need to reclaim for a full-on reversal, okay? We can very well do something like this, where we come up here, we reject, we come down, we form a little range, and then we go for a full breakout. We could do something like that, okay? That's certainly possible. Again, we don't know if we're going to do that or if we're just going to melt through and view reverse, which at a time like this is very possible. Why? Because forced selling caused this drop, and anyone who was going to sell probably got wiped out at this point. And people that held spot through that, hopefully are experienced in this market and understand that we're not going back down to these levels. So they're probably holding, and I doubt they want to sell. Well, it depends on, I guess, your conviction and stuff, but I certainly wouldn't be selling on a retest of 65 cents, hoping to buy lower. It makes no sense to me. So I wouldn't be selling here. So we'll have to see how many sellers step into this logical area of supply, this logical area where we'd expect sellers to step in. How many actually step in? Do we actually get sell pressure here that prevents us from going higher, or forces us back down to consolidate and chop around longer before we're ready to actually make the move back to the upside? We'll have to wait and see. But again, this is how you would analyze these charts that have these giant wicks. Go to the higher time frames, look at higher time frame closes, look at horizontal levels. That's what you want to focus on, not the wick. Had 13K before this slaughterhouse. Now I'm sitting with 3K. How would you get your money back? Cred, you're a mentor since day one of my trading activities. I like your perspective on markets and would like to know how you would change the game in this situation. Great question. And I'm sure his scenario mimics many others, right? Again, my biggest loss I've ever taken in 7 years. I feel what he's feeling. I feel the way that he's feeling. I feel like I had this level of wealth. That level is significantly lower now. How am I going to recover from this? How am I going to get my money back? Guys, I want to emphasize here, because this is something that I've been thinking in my head for the last 2 days after getting liquidated in my own positions, okay, on my trading accounts. I'm significantly down. My next question is, how do I get back to where I was? Is it reasonable to expect me to get back to where I was? What has this changed in terms of my expectations for the end of the cycle and the levels that I should be at? I just want to say, guys, if you're in this position where you're down to 25% of what you had 5 days ago, it's not over, okay? It's absolutely not over. And I will say that, in my opinion, you will be able to get back to those same levels that you were at. Even with only 25% of what you had, you will be able to get back, in my opinion, to those levels, okay? It is, I have very high conviction in that statement. And not only that, but I think you'll be past those levels by the end of this cycle, okay? And I just want to give you guys an example. CRV is currently trading at 57 cents, okay? We were at $1.30 last year. Where are we going, in my opinion, to new all-time highs? Again, this hasn't changed that. This is a speed bump. Ugly, nasty speed bump, or like a brick wall that we all just hit, but we're going to get past it, okay? I still have targets for new all-time highs on CRV, and that applies to all of my coins as well, okay? If you had $10,000 5 days ago, okay, in CRV, for example, at 65 cents, if you're holding spot, you're barely down, which is fantastic, okay? And again, this is just, again, to show you guys that don't get freaked out by what has happened, especially if you're holding spot, you're totally fine. If you're holding spot, this was all a bad dream that's going to be gone in a few weeks. Like, you'll be totally fine. You'll be back to where we were. Again, on coins that I think have some fundamental value or utility or reason to exist, not on some of the junk that's out there. But if you're holding a coin like CRV that has some sort of fundamental value, you'll be totally fine in a number of weeks, in my opinion, okay? If, however, you were trading, or you had a trading port, or you were on leverage and you're down at a quarter of what you had 5 days ago, by the time we're back at $2, you'll be back to where you were, okay? But that's not the end of this move. That's pretty much the start. By the time we're at $6 or $7 in all-time highs, you'll have 3 times what you had 5 days ago. And by the time we're in price discovery, you'll have significantly more than that, okay? And this assumes you do absolutely nothing. You simply hold your spot that you have left. You simply hold what you have left in the coins that you like. In my opinion, will be 10x higher by the end of the cycle, no problem. So if you're down from 10,000 to 2,500, 10x from 2,500 is $25,000, okay? That's still 2.5 times that you had 5 days ago. And that's, in my opinion, like, relatively conservative, okay? So you're going to be fine, John Wick. You're going to be fine. Many of you will be fine, even if right now it doesn't look like you will be, even if you're struggling right now, even if you're mentally having difficulty trying to digest what just happened, which is tough. I get it. Again, I'm there. I feel your pain, but you'll be fine, in my opinion. Okay, so yeah, that's what I want to really get across here. There is still a ton of opportunity in the space. Things aren't as nearly as bad as they might seem. Okay, especially on spot coins. Most of the ones that have dropped significantly have had bounces back. Again, CRV is an example. Keep in mind that prior to this drop, we were trading at 72 cents. Okay. In fact, before these massive liquidations happens, we got down to, I'll go to like a 5-minute chart so we can really isolate when the drop happened. So you can see here, we were trading around 69 cents before we really collapsed, right? We're currently trading at almost 60 cents. We're down maybe 15% from where we were before the massive liquidation. So in terms of spot holdings, in terms of potential for the rest of the cycle, nothing has really changed. Okay, this was an ugly event, but it really just affected liquidation, leverage players, and structurally, I know it did some damage here, but we will recover from this, and everything will be fine, and you'll make it back. Okay, and you don't have to do anything. Is my point. You don't have to do anything to make it back. You just need to hold. Okay, even if you literally do nothing, you will probably make it back. Okay, not financial advice. Of course, everything that I say is my opinion, my thoughts, but based on all the logic and reason and rationale, everything that I've seen over the last 7 years of my experience, you're going to be fine. Okay. So don't make any rash decisions. Don't start using leverage right now to try and make it back. Don't revenge trade. Don't start opening leverage longs to try and get back to where you were. You will get there. All you need to do is sit still and just be patient, and you will be back. Okay. It will take a little bit longer, right? Obviously, but you will be back, and you will not just be back. You will be higher than where you were if you are patient and you don't make any silly decisions here in the heat of the moment because of the emotions that are flowing through you right now. Okay. So that is important, and that's probably the most important takeaway from this entire video. Okay. I also want to add, guys, and I want to talk about and kind of emphasize something again here. The last event that we saw, this event that we saw again, was a function of or result of leverage in the system and liquidations. Okay. And I want to show you an example. Here's Track, Origin Trail. Of course, I've been talking about this coin for some weeks now. Back before this event happened, when it was trading at 40 cents, I talked about it here in June of this year. I talked about it again here in September, late September, early October, before this event happened. And you can see here that Track is actually one of the top performers right now in the entire space. This was the dump that Track had. Okay, it went from 49 cents to 40 cents. You wouldn't even be able to tell that we had a massive liquidation event looking at this chart because it barely moved down. Why? Because Track is not available to leverage long anywhere. You cannot long Track on leverage. You cannot long Track on margin. It is not available to leverage long on any exchange. Therefore, there was no leverage to be flushed out here. And so unlike those other coins that dropped 60, 80, 90, 100%, Track dropped 20%, 10, 15%, and that's normal for Track. It does that. It's done that with or without these massive events in the market. And it recovered faster than most other coins, and it's now at new local highs. This is where the drop occurred across the board. Track was at 47 cents, dropped down to 40 cents, 15% downside. It's now trading at 62 cents. Why? Was it seemingly unaffected at all whatsoever by the events that happened in the last 48 hours? Because there was nowhere to leverage long this coin. Therefore, there was no forced selling. There was no forced liquidations. And we recovered extremely quickly because of that. Okay. There was, again, this just emphasizes that what we saw in the markets the last 48 hours is not people willingly panic selling. If that was the case, Track would have fallen down with the rest of them. It did not. Why? Because the events that we just saw the last 48 hours were, again, specifically forced selling and forced liquidations. These are not levels at which anyone really wants to sell. And this is, again, why I think that we will recover from this just fine. And we will not revisit those lows in a lot of coins. And obviously, I'm very bullish on Origin Trail for a number of reasons. Track, this is a $300 million market cap coin. It is by no means a small cap or a micro cap. It is a $300 million market cap coin. I think it's in the top 100 in terms of market cap. But this is the number one performer in the top of the top 500 coins that market cap in this space. Is the number one performer the last 24 hours. And again, the reason why I like this coin so much, really briefly, zero inflation. It's fully circulating. There's zero inflation. It generates actual revenue, real yield, because it offers a product that real entities are using and they're paying for that service and that real yield. is redistributed back to stakers of the coin and those that are running nodes, which is 100% of the yield is given back to holders of the token. We're staking, and you don't need a stake for like 4 years, like CRV for example. You don't need to lock the coin for 4 years, or you don't need to stake for 4 months like CVX. You can stake and you can unstake within 3 weeks. I think it is 3 or 4 weeks. But if you do stake, you earn that yield, which is, I'm not sure what the APR is right now, but you're earning all the revenue that's being generated by the protocol. And so yeah, zero inflation generates real yield. Obviously held beautifully on this market correction and is making new local highs. And one of the criteria that I have with my coins that I like is that I want them to be down from the highs, because that means that they have a lot of potential of upside, right? I don't want to buy something that's up 1,000%. I want to buy something that's down 90% so that I can buy it before it goes up 1,000%, and I can make 10, 20, 30, 40, 50x. Just to show you guys the full chart real quick. Okay, so yeah, this is the all-time high chart, and I love this chart. It's a beautiful chart. Buy zone, accumulation zone down here in green. We visited it after we topped at 385 in 2021. Came down, chopped around a bit, moved up, came back down into it. This is where I tweeted about it to buy because it's in the buy zone. We're currently trading at 61 cents after a beautiful recovery of the events of the last 48 hours and new local highs. Now, again, number one performer in the top 500 right now. People are asking me where they should buy this if they missed the entries earlier, and where they should look to get in. We're actually at the retest zone right now. So this is where I'd mark off as an area of support. You can actually take, this is a broader area. You can go down to this zone here. Even we didn't quite touch it yet. We may not touch it, but this is the new buy zone. If we get to 41 cents, if we dip under 60 cents, basically it's a buy in my opinion. And we're looking for, again, continued upside, and initial targets will just be the local highs here at $1.30 and $1.60, but ultimately targeting new all-time highs above 380. And very, very bullish on this token. But again, this is what a lot of coins look like, and this is what I mean by if you got devastated or hit by the actions of the last 48 hours and you're down to 25% of what you had, it's not too late to make it back and more. For a lot of coins look like this right now, and just moving back to the old highs will be a 5 to 6x, which would bring you back into profit. Above that, I think we're going to double digits personally. Not shown here, but on Coinbase, when it was listed on Coinbase, we wicked to $6 and some change. So one kind of result of not having any inflation on this coin, meaning there's zero new coins entering circulating supply, is that the coins that are being, a lot of the supply is being held by diamond hands or by holders, and so there's a very low float. So when price does accelerate to the upside, because there's no new coins entering supply, the only way to get the coins is to buy them off of current holders, and because current holders have proven to be diamond hands and are not interested in selling for cheap, it's going to aggressively push price up. So that's why we had a wick to $6 and some change when it was listed on Coinbase, because there's a very low float, because there's no inflation. And so when there is a surge of demand, price moves up very aggressively. So again, I think we're going to double digits, which is $10 plus. That's over a 10x, right? So there's a lot of opportunities to make back your money simply by holding your spot coins and not doing anything. But yeah, that's my perspective on. I just want to share that as to how we know that this was purely a liquidation leverage event, and it hasn't affected spot markets as much as people like to think here. And everything will recover, in my opinion, or most things, as I previously said. So real quick here, guys, a troll here. How far are we moving the post this time? And again, what I want to emphasize is this is a trollish response by a lot of people who simply don't pay attention to analysis, don't understand how the markets work, don't understand analysis, and think that invalidation of a specific level means that the goalposts are being moved, or they simply don't know how to read a chart, and they like to troll. But I just want to kind of emphasize here, guys, there's no moving of goalposts happening here, okay? As I previously said, we had multiple scenarios here. As I previously said in my videos, high time frame validation here at 75K. I explained the logic and rationale behind that in those videos. If you want, you can watch them again. The reason why I give you guys multiple scenarios when they exist, when they're reasonable to expect, is because there are multiple scenarios in any market, right? There's no guarantees of moving in any one direction. Something like what we saw in the last 48 hours can happen, random stuff that we can't predict or can't expect in normal circumstances, and so we have multiple scenarios. As you can see here, again, on Binance, we wicked below 105K. That technically invalidated this scenario. That leaves us with only one scenario left. Very, very bullish one still, and you guys can go back to my prior videos to see what that was if you want. But point is, there's no goalposts being moved here, guys. People want me to say, the bull market is over now. I'm bearish. And if I don't say that and I say nothing has changed and we're still bullish, they tend to get upset by that. They want me to be wrong, even though I can't make myself be wrong. I can't change the fact that we're currently trading just 10% below prior all-time highs. This is not a bear market, guys. I don't know. They want me to admit that things have changed and that I'm wrong because they just want to prove that I'm wrong. It's this obsession with, I guess it has a lot to do with it, but jealousy, envy, anger that I have an audience, that I was able to build this audience, that I've been able to come as far as I have, and they take this out in those types of trollish comments, and so they get upset when I say things like everything's fine, we're still in a bull market. They don't want that to be the case just because they want to prove me wrong. But when you look at these charts objectively, there's no goalpost being moved here, and there's no reason to say that we're now in a bear market. Nothing has really changed, especially on Bitcoin in the higher time frames. What has changed is a lower time frame price action. Lower time frame has been invalidated in certain structures, like this one here, but the high time frame has not changed. And you don't even need to know or understand structure or alleyway to understand that we're just 10% below prior all-time highs. This by no means constitutes a bear market, and this by no means changes the bigger picture, right? You can ignore what happened yesterday. You can ignore this and just look at this chart and see that we still have a higher low above 98K. We still have a higher low above 74K, which is really relevant. But for someone who doesn't understand that, you can look at this and still see that all we did was we swept all these lows and we closed above. So, yeah, so this guy will get a block, but yeah, it's funny that people are just itching to make me say that I've changed my perception or my bias, or I've changed my expectations. Nothing has changed. Nothing has changed at all in terms of high time frame targets or high time frame structure. So that's that. Let's see here. Good question again. We've talked a bit about this. Some exchanges have invalidated setups based on the crazy wick from yesterday. Meanwhile, some have not. With such a disparity between exchanges, how do you decide the validity of wave counts? So again, yeah, like we just talked about in Bitcoin, on some exchanges, lower time frame counts were invalidated, right? The wick below 105 on Binance invalidated this idea. On Coinbase, we didn't wick below 105, so it's still technically valid. How do you approach this, right? Generally, I understand that this wick was there on some exchanges and not on others. So I basically leave it open-ended, right? I go back to where one step before that, and I say, okay, well, assuming we're going to go with the worst case scenario here, which was that we did hit 105K, I'm going to assume that this idea was invalidated. I'm going to assume that scenario 2 is invalidated, and that brings me to scenario 3, which is that we have a higher time frame impulse off 74K, and this is all one big corrective structure. What does that change in the big picture? Nothing. What does that change in the lower time frames? It means that I have to assume that we're still in this corrective structure and have to wait for another impulse. So it doesn't change that much, but I will, in this case, just assume that, okay, we don't know if this was a true invalidation or not because it didn't hit it on some exchanges, it did on others. We're just going to assume that we're not sure, basically, and we're going to wait for another impulse to print here for confirmation that the next leg up has started. So that's how I approach those types of things. We just kind of reset. Okay, let's look at current price action. Let's look at current lower time price action, see if we can identify another impulsive movement, and let's focus then on that rather than on this ambiguous now move where we are not sure if 105 got hit or 105 didn't. We'll just focus on price action moving forward on the lower time frames, and on the higher time frames, we focus on the higher time frames, obviously, and nothing has changed there. So that's kind of how I approach these instances where we have these discrepancies. A lot of these questions are repeats, guys, but again, I'm going to answer a few more, then we'll end this video. Someone on the other post mentioned something really important. A lot of coins, even with those fundamentals, are sitting on high time frame zones right now. If we were to buy them, how do we set our invalidations? So this is another important distinction between trading and investing or holding spot, right? So for my spot coins that I buy, I don't have any invalidations or any technical stop losses. Why? Because I'm buying it for the end of the cycle, and I'm not planning on selling until Bitcoin tops. The cycle isn't over. Bitcoin isn't topped. I'm not interested in selling before that. If they drop, I weather the storm. Why can I do that? Because I know that they have fundamental value that allows me to ignore the lower time frame fluctuations and hold through the damage, or hold through the waves and roll with the punches. Okay, so invalidations for me, I only set those on trading accounts. I only set those on trading positions. I only set those on trade setups. And so if you're buying spot here, you're really just buying as an investment, quote unquote, and you're holding till the end of the cycle, right? You don't have any invalidations. Your validation is zero because either the coin is going to die, which means it has no fundamental value, or there's been some reason why it's dying, or if we're still in a bear market, it's going to go higher, even if there's some lower time frame fluctuation. And you don't want to end up selling because of lower time frame invalidation just for it to recover and go up. Perfect example, CRV. If you had set a lower time frame invalidation on CRV at 17, 18 cents, 20 cents, or at the lows down there because you thought, hey, we're not going to go there on your spot account, and we wicked there, you would have just sold your spot at the bottom, and we now be up 2x from that level, 3x actually from that level, and you would be out of your spot positions. So I don't have invalidations or set stop losses on spot positions because I'm willing to weather the short-term volatility because I know that these aren't going to die and go to zero because they have some sort of fundamental value, and I plan on selling at the highs. So this is a question for if you're actively trading. If you're not actively trading, you're buying, you're DCing the spot, and you're holding till the end of cycle. If you are actively trading and you don't have a clear invalidation or a clear setup, then don't enter the trade. So it's that simple. If you're sitting on high time frame support, if you're buying spot, great. That's what I would be doing. If you're looking for a trade on high time frame support, you either have an identifiable invalidation level or you don't. If you do have that identifiable invalidation, set your stop loss. If you don't have that, don't take the trade and only buy spot. And that's my approach there. Question. I'm curious how liquidation wicks of such magnitude affect market structure. For example, if a line graph plots open/close, whereas a candle has time frame lows, which would include a wick, a line graph may not break structure, whereas a candle graph would. How does a cascade look like this get assessed regarding Elliott wave? So again, with Elliott wave, wicks are important because the idea behind Elliott wave is it's something that I won't spend too much time on, but basically the idea behind Elliott wave is if you have an uptrend or if you have a downtrend, if you have some sort of an impulsive move, which is a trending move, a series of higher highs and higher lows, or a series of lower highs and lower lows, depending on if you're an uptrend or a downtrend. The idea is the start of where that trend began, those lows should be defended by buyers who step in to buy the dip, right? If there is momentum behind the asset, which causes a lower time frame impulse, which is, again, a lower time frame uptrend or downtrend, the start of that impulse where the buyers pushed aggressively to cause that impulsive movement, pushed aggressively to cause that momentum to the upside or the downside, the start of that impulse, the lows of that impulse should be defended by buyers. Why does that make sense? Because if the momentum is real, if it's true, then enough buyers should step in on the dips, on the retracements, on the pullbacks to form higher lows and continue the trending move to the upside or the downside. If the lows are invalidated, meaning if we wick below them, it means that there wasn't enough buy pressure to sustain the momentum. Okay, that's why we say if the impulse is fully retraced, the momentum gets reset, meaning there wasn't enough momentum there to keep the trend going on that time frame. Okay, so the wick for Elliott wave is important. It's relevant, right? And it means that if we do wick below the origin of the impulse, that momentum has been reset, and we simply have to wait for another move to suggest the momentum is back, another impulsive move to suggest the momentum is back, and that allows us to then assume that the trend is now continuing, okay? Looking at a line graph, which doesn't plot the wicks, it plots the opens and closes. This is similar to looking at a higher time frame chart, like I just showed you guys, and looking at horizontal closes, okay? In a line chart, it ignores wicks and only focuses on closes. So looking at the closes like I just showed you guys on higher time frames is equivalent to looking at a line graph that only plots the opens and the closes and not the wicks. So you can look at a line graph just like I showed you guys to make it a little bit more clear when you're looking at those higher time frames, areas of support. You can switch to a line graph to help you kind of tune out the wicks. So for example, I'm going to go switch to a line graph here on CRV on the daily, and let's see how it looks. See, you can see here, the line graph, the close was inside this area of support. And inside, again, we had that second area, which was this right here. It closed inside, right? So if you look at this from a line graph perspective, we held this area of support, right, which is a key area of support. Even though the wick wicked so much lower, on the close we held, which is bullish, which is great, right? So this area of support held, buyers stepped in as we expected, ignoring the liquidations, of course, and we're holding this low. This is a higher low from a line chart perspective, right? So this is where the line chart helps you ignore that wick. Let's go to the weekly, and you can see that it looks even better on the weekly. Look at this on the weekly. On the weekly, we have a higher low still on the line chart. Okay, and again, this tunes out that ugly wick, which is a forced selling liquidation cascade. So again, this is why I said if the weekly closes above these levels, this is a very bullish chart still. This is technically a higher low when we take out the black swan event that occurred, right? So yeah, good idea to actually look at these things with a line chart when you're unsure and you want to tune out that wick. We will go back to our normal candles for now, though. Edwin's question here, I was wondering your opinion regarding this being a manipulated drop with USD pairing to crypto valuation hack, exploit or failure outside the blockchain technology rather than to exchanges. This is exactly what I discussed in the beginning of this video, or kind of throughout the video. So kind of answered that already on my thoughts on what caused this drop. So yeah, we'll continue on. Hey, Cred, have you ever seen such a big percentage of a drop in all throughout your? No, never seen this before. Again, no one has seen this before. It's been a decade that I've been in this space, and I've never seen anything like this. So it's not shocking to just you guys. It was very shocking to me as well, and it was very shocking to a lot of us who've been here for years. If you witnessed this, you experienced, in my opinion, the worst liquidation event in history. I mean, not even in my opinion, objectively the worst liquidation event in history, and we talk about how we've been through these big black swan events. Well, guess what? You've now experienced one yourself, so you understand the emotions that go through everyone at this point. But again, to emphasize, we've been through, this is like the fourth one that we've been through. This was more violent than anything we've been through, but we've been through these before. We'll go through them again, and you'll recover. You'll be back from this. I've been through 4 of these now. I've recovered from all of them. Granted, I didn't have hits this bad, but I've recovered from all of them, and I expect to recover from this one again. And you guys will too. Okay. Another good question. This event will elongate, accelerate, have no impact on the cycle. Yes, no impact on the cycle. In fact, in a way, this was much needed, I think, to kick things into gear. So this was capitulation. What follows capitulation is a bottom. What follows a bottom is movement up to the upside until the top. So this was good. This was like Bitcoin at 3K before we went to 60K. This was like Bitcoin at 15K when FTX collapsed before we ran to 100K plus. So yeah, this doesn't change the cycle per se. If anything, it finally kicks us into gear to get those big moves we've been waiting for. So, but the other part of this question, which I think is more important, those who took a big hit with less funds, would you say a concentrated portfolio makes sense? If so, CVX CRV would be a good choice? Question mark. Not financial advice yet. Just an objective judge point of view. Thanks. Not necessarily a concentrated, like diversity for diversity's sake is important, right? So like a great example is like if you were holding only like Atom, right, when this happened, and Atom went to 0. Well, if you only had Atom, then obviously that's really bad. So yeah, concentrated is there's a fine line between concentration and diversity, and I always say you should have diversification to some extent. That doesn't mean have 20 coins or 100 coins, but have a good 5 or 10. But the condition is that you are equally bullish on all of them, or like that you're relatively bullish on all of them to the same extent. Like you have high confidence in all of them. I don't want you guys to diversify for the sake of diversification into something that you have no confidence in. That's not the point of diversification. Diversification is important to the extent that you're diversifying in assets that you have confidence in, right? So pick 5 or 10 alts that you are confident in and diversify amongst those, right? But make sure you do your research before you do this and make sure you're confident in all of them. Don't diversify into something that you are not confident in just because you're trying to diversify, right? So that's the important thing here. So even if you have a small portfolio or a big portfolio, it doesn't matter. Diversify into a select number of alts that you have confidence in is the answer for this. Do you think there has been much insider trading before this huge liquidation? And is there any way to spot suspect movements by looking at charts volume, etc.? There's some people that have proposed that there was some inside trading, and obviously the most obvious one is that entity on Hyperliquid that opened up billions of dollars of shorts on Bitcoin and Ethereum like moments before the big liquidation happened. He ended up closing them for a profit of 200 million at the bottom. And yeah, I think that it's definitely possible that this was insider trading to make a move like that, literally 30 seconds before the crash happened, to open up billions of dollars worth of positioning, directional positioning, and then close them after a crash happens 30 seconds later for hundreds of millions. Yeah, that looks like insider trading to me probably. But at the end of the day, guys, we can only speculate on these things. We don't have proof. And there's not too much importance in focusing on that. It doesn't really... We can't prevent it. We can't change it. Of course, if regulations it'll be used as a reason to pass regulations that may positively but also may negatively affect the space. So we can only speculate, and I wouldn't spend too much time focusing on that because it's nothing that's in our control. And one thing I've learned in life is that you can't focus on stuff that is out of your control. It'll make it a lot easier for you to deal with things if you focus on what you can control rather than what you can't. So that's kind of how I approach those things. It does frustrate me that this type of stuff happens, of course. It's not fair by any sense of the situation, but the world isn't fair, unfortunately, and these things happen, and I don't personally like to spend too much time or energy focusing on them because my energy is better spent focusing on myself and my situation and improving it in situations like this. So that's my thoughts on the potential insider trading or potential manipulation. And then the other question is there a way to spot suspect movements by looking at charts volume, etc.? I've seen people arguing that you can follow certain things or track certain things to personally, kind of anticipate these things. But guys, for the amount of energy and time spent on looking at these signs and signals to try and identify these things, sometimes you're just going to get blindsided in this space. Sometimes this stuff is just going to happen like it did now, and sometimes there's nothing you can do about it. And to me, that energy spent trying to search for signs or symptoms of this oftentimes will backfire, and you'll end up seeing things that'll convince you to take certain positioning based on speculation, and then those things will never actually pan out, and you'll end up psyching yourself into or out of positions that you shouldn't be worrying about when you should just be focusing on the charts. You just have to know that there will be events like this that'll come out of the blue that are unforeseen, and that'll happen. It's part of the game. And rather than trying to foresee everything and position accordingly, which will drive you mad, just focus on the charts and focus on what we do know, and establish a system that protects you in these instances, or that prevents you from losing everything in these instances, and then move forward knowing that they're going to happen once in a while. And you just have to. That's just part of the game, instead of trying to anticipate everything, because that's going to drive you guys mad. Could you give your opinion on why CRV was particularly affected? I understand that there is a link between the most affected cryptocurrencies and the fact that they are used as collateral. Yeah, so CRV is available to trade on leverage and margin. Okay, so pretty much any coin that was available to trade on leverage or margin suffered a pretty drastic drop. He asked, why was CRV particularly affected? Now, again, for those that are in CRV, and I've been seeing this a lot, I'm hearing a lot of, why did CRV crash so hard? Why did CRV crash more than others, right? CRV dropped down 73% from the highs. And if we go from like the 5-minute candle that preceded, that like actually led to this drop, we can take the exact start of the drop here at 69 cents to the exact low. It was about 74%, okay? I want to remind you guys that the average drop on over 1,500 alts was 60 something percent. I think it was like 65%. So CRV dropped 74%. It was actually not affected. It affected a little bit more than the average, but not affected like a ton more than the average, okay? So there's nothing wrong with CRV here. In fact, look, I mean, it's already making a beautiful recovery, but there's nothing wrong with CRV where it wasn't particularly affected more than everything else. It was affected just a little bit more than average, but generally right in the ballpark of the average drawdown, which was 60+%. CRV had 74% drawdown from highs to lows. But yeah, there is a link between the fact that they're used as collateral. CRV is a coin that was allowed to be used as collateral on Bybit, right? I know that because I trade on Bybit. I didn't have my CRV as collateral there, thank God. I had it off exchange because it's a spot holding for me. But yeah, if you were holding CRV on Bybit and using it as collateral, then you had forced selling occur here, which I'm sure happened to some during this drop. And there is a link between those coins that were used as collateral and those that were not. For example, again, Track, not available as collateral on Bybit, on Binance, or on any other exchange, and Track barely moved down 15%. Whereas other coins that were used as collateral saw a drawdown of 60+%. See, there was absolutely a link there, but CRV was not like an anomaly. Most altcoins that were used as collateral had drawdown of that extent. How the market maker failed and how people got wrecked instead of being stopped at. Yeah, a lot of people had stop losses that didn't trigger, or that triggered a lot lower and did get wrecked because of the lack of liquidity. Whether this was the fault of market makers, or whether this was because of the forced selling triggered by people leveraging on collateral, using collateral, these altcoins as collateral that are very volatile, and the chain reaction and just a natural occurrence of what happens in these situations is hard to say. I don't know. I'm not investigating the market maker actions and trying to see which market makers pulled liquidity or which didn't, and how much the selling was, the forced selling was relative to how much liquidity was pulled and all that stuff. I don't know. And there's not much point in trying to go over that and trying to control things that we can't control. We have no control over that. What we do have control over is the positions that we take, how much leverage we use, and how much collateral we keep on an exchange. So yeah, that's my thoughts on that there. XRP has not broken a high time frame bullish market structure. I know it sounds crazy to say that, but I had someone make that comment, and I had to point out to them that We did break lower time frame structure, obviously, right? We did break lower time frame structure, but again, the wick, insane wick. But again, our impulse on XRP, as I've been talking about for some time now, started down here at 48 cents, right? We had 1, 2, 3, 4, 5. We wicked down to 85 cents. So no, we did not break high time frame structure because that would have been the low of the impulse. We did make an ugly drop. We did see ugly wick, but look at the higher time frames, guys. Look at where this wick ended up and look where we are now. We dipped into this gap, which on the higher time frames I talked about earlier in my earlier post. We wicked into this gap, right? And we're trading here at 255. Like we cleared these lows, which we said was a possibility, wicked into this inefficiency, and are having a beautiful close. So yeah, I don't know what to tell you. We didn't break high time frame market structure, and despite us seeing a really ugly wick to the downside, the chart looks really healthy, right? We could have gone down to, we could have closed down above 234, and again, this is the range that, like I showed you guys on CRV, this is the range of relevance here on XRP. So, any high time frame close inside or above this green zone here at 236 down to 210 is healthy, and you can see our daily close right above it, and our weekly is probably going to close a lot higher than it. So very healthy looking chart in the higher time frames. This has not damaged high time frame structure on XRP. It has not damaged high time frame structure on a lot of coins like Bitcoin or Ethereum, a lot of majors, right? So that's that. Let's see here. Guys, that is it. I think I'm going to wrap this up. A lot of these questions are repeats, and I think this video served its purpose. I think it's kind of conveyed my thoughts here on this recent drop. My whole point of this video was to talk to you guys about one, how it happened, two, how a lot of people were affected by this, and a lot of people are in the same boat right now, and a lot of people are struggling. Three, how it's not over, how we will recover from this with some patience, and how the cycle is not over. We're not in a bear market. Not much has changed in the higher time frames. And four, how the worst is over and we're probably going to rise up from here, probably pretty aggressively. And five, again, hopefully to reassure you guys who are in the struggling or who are struggling right now in this tough situation. That was the point of this video, to reassure you guys that it's not all over, that we're going to recover from this, and it's going to be okay. The guys that have been since 2017 and earlier have seen stuff like this play out time and time again, and we've recovered from it every single time, even though at the time it seems like we won't. And this is just another speed bump in the road to the end of the cycle and new all-time highs across the board in a lot of these coins, and it's going to be fine. Okay. The next video, guys, I will be putting out another video in the next 24 to 48 hours, specifically talking about coins like XRP, like CRV, like Ethereum, like Bitcoin, specific levels and TA on those coins if it's needed. And I hope you guys enjoyed this video. If you guys did, please like, share, and subscribe. Leave your comments in the comments section if you enjoyed it. And yeah, that's going to be it for this video, guys. I will catch you guys in the next one.